Welcome back. We'll start off with China, where Moody's Ratings has revised its 2025 GDP growth forecast upwards to 4.2% from 4%, citing expectations of stabilizing credit conditions and the impact of Beijing's stimulus measures introduced since September. The agency highlighted that these efforts are likely to offset some effects of potential increases in U.S. tariffs. The revised forecast reflects optimism about China's capacity to navigate external pressures and sustain economic recovery. The updated projections were detailed in a Moody's report released on Monday. Officials from the Office of the Central Committee for Financial and Economic Affairs stated that China will introduce a series of incentive measures in 2025 to boost consumption and drive economic growth. Key measures will focus on promoting steady growth in personal incomes, including direct fiscal support for consumption, enhancing social security levels, and improving employment for key groups. China plans to raise basic pensions for retirees, increase fiscal subsidies for medical insurance, and introduce policies encouraging childbirth. Moreover, the National Bureau of Statistics has announced that China's new house prices fell just 0.1% in November compared to the previous month, marking the slowest decline in 17 months and signaling potential stabilization in the crisis-hit property market. Annual prices dropped 5.7%, improving from October's 5.9% fall. Government measures to revive the sector, including mortgage rate cuts, lower down payment requirements, and tax incentives, are supporting home buying in major cities. Still in China, the National Bureau of Statistics reported that China's industrial output grew by 5.4% year-on-year in November, accelerating slightly from October's 5.3% growth. This indicates tentative stabilization in the world's second-largest economy, and recent stimulus measures begin to take effect. Retail sales, a key measure of consumption, rose by 3% in November, slowing from a 4.8% increase in October. Fixed asset investment grew by 3.3% in the January to November period compared to the same period last year, slightly below the expected 3.4% rise. This follows a 3.4% increase recorded in the January to October period. The National Bureau of Statistics has reported that China's retail sales grew just 3% in November compared to a year earlier, falling short of the 4.6% forecast. This marked a sharp decline from October's 4.8% growth, which had been boosted by the early start of the Singles' Day shopping festival. The sluggish retail figures come as the real estate sector continues to weaken. Real estate investment shrank by 10.4% in the January to November period, deepening from a 10.3% decline recorded through October.